Hey folks, Dan Frio here with your market update for December 23rd, 2024. So mortgage rates last Friday, they dipped a little bit. The 30-year fix came down about 10 basis points. Will that trend continue? Well, this week's going to be a holiday week. We know Christmas is on Wednesday, just 2 days away. That's hard to believe. Then next week we have New Year's, and that's coming on a Wednesday as well. So the next 2 weeks are going to be short weeks on Wall Street. So let's get over to the news to see how this news that is coming in might affect the markets, equity markets, as well as interest rates. So let's get over to it. This week, here's what we have. On Monday, we have durable goods orders. They just came in minus 1.1. The last reading was 0.8. Not sure where that was expected, so we'll check and see how the equity markets and the other markets are moving on off of that. Consumer confidence, it came in at 104, lower than expected. I expected that to come in. A lot of people are just anxious right now. Then on Tuesday, it's a short trading day. Not much is going on there. Wednesday, the market's closed, and then on Thursday, we have initial jobless claims. So unless this number really blows out one way or another, the markets are just going to be stagnant this week. Let's get over to some of the headlines. Treasury yield slightly higher to start the week with the quiet data week coming in. So again, what happens a lot of times in Wall Street in the bond markets is if there's not a lot of trading, there's not a lot of people there conducting trades or offsetting trades, what could happen is it could be really volatile. So this week and next week, we're going to take everything with a grain of salt. I'll continue to provide you guys with the information, but if there's a whipsaw up and down, just over the next 2 weeks, it should level off. It's just because there's a limited amount of traders on the floors of these equity exchanges, and that might cause volatility in the markets. We usually see that around holiday weekends and long holiday extensions like we have right now. So that's what we're looking at right there. Wall Street reevaluates higher for longer rate posts from the Federal Reserve. So the Federal Reserve came out last week, and here's what kind of shocked the market. It said right here, the threat of government shutdown and hawkish signals from the Federal Reserve. That was last week. That caused all this uncertainty. So now over the weekend, the government kind of got together and they put together a resolution to get us through the next 3 or 4 months on the debacle on how much they spend, because they overspent again, and now they're coming out and saying, hey, we need more money, so let's increase the debt ceiling. At some point, they got to halt this thing and say, okay, we can't spend anymore, folks. But that's my opinion. In the past week, the Dow Jones, I didn't realize it dropped this much. So in the past week, the Dow Jones dropped over 2.3%. The NASDAQ shedded 1.8%, and the S&P fell 2%. That's a pretty major event right through there. So that should be, a lot of people were expecting a pullback in the markets because it was a little bit overbought, and this might just be the catalyst to that. And I'll show you how the equity markets are faring at the end of this video. So let's get over to right through here. Let me log into my exchange. Somebody must have logged in behind the scenes for me. So let's get over and see what the bond market's doing right now. Whoa, the bond market is just like I expected. The bond market is down 20 ticks, and you can see that it continues to deteriorate. What we're seeing right through here, like I said, is this is what we focus in on when we're trying to figure out what's going on in mortgage rates. We figure out we follow the bond that trades on Wall Street that makes up the biggest portion of your mortgage rate. It's right through there. Okay, it's called an MBS. It trades on Wall Street. You might even have it in your portfolio. All you need to understand is this. If this number is going down, the price of a bond is going down, that means rates are going up. Okay, the further down it goes, well, the higher the rates are going to go up. We love when this number or the price of bonds are going up, and it's not happening today. So like I said, there'll be volatility in the markets today. If you go over to the economic calendar, durable goods orders was down 1.1%, and consumer confidence was down. I thought that would actually prompt the market or push up the market a little bit, but it's not right at this time. Let's get over the CME FedWatch tool. This is what the predictions are of when the Federal Reserve is going to cut the rates the next time. Well, the bad news here is looks like they might not do anything until maybe May or June. So the Federal Reserve meets every 6 weeks, and they come out and tell us what exactly they're going to do. And so we follow this on a daily basis to see what they're going to do. And the last 2 meetings, I think it was the last 2 meetings, they cut rates. And ever since that, mortgage rates basically went back in September 18th. Mortgage rates are about 6.1. Today, where are they? They're at 7.1. So they're up 1 full % since when the Federal Reserve started cutting rates. So is that good news, a predication of what's to come? Well, I think the markets are going to start to stabilize in 2025. Let's go over to the economy at a glance, basically. Here's what the Federal Reserve's contending with right now. The PC, that's the #1 gauge that they follow in inflation. Look, it went from here, you see through here, it went from -7 or right about 7 something, all the way down to 2.1. They want this thing to get to 2. And then in September, it was 2.1. And then in October, it was 2.3. And then the last reading was 2.4. It's going the wrong way. So that's why the Federal Reserve came out last time and said, we're just going to wait right now because it appears that inflation's rearing its ugly head. The good news is on the unemployment front, the number's really not moving there. It's staying steady at 4.2. We have some additional good news. The GDP, look at the GDP over my head. It is now at 3.1%. It was previously at 2.8. So that is good news. And the good news about this also is in a roundabout way, the increase of the GDP will actually bring down our national debt, or the percentage of national debt to our GDP, which is a great signal there. So that's what we're seeing in the markets right now. I know it's probably a little bit boring for you, but there really is no reason for this sell-off this morning. Might just be limited trading. There might be people taking profits in the bond market. Not quite sure, but the economic news right there isn't enough really to push down bond yield 17 ticks. Let's get over to the stock market. The equity markets are red all the way across the board other than the VIX. So we have the Dow Jones down 285 points, S&P down 26, NASDAQ down 51, the Russell's down as well, and then the VIX is, the VIX is up and teetering on 20, the number of 20. It's up 8.55%. That is not good news, folks. Okay, when you see the VIX take a spike up, we'd like this thing to be down about 10 or 12. It's almost at 20 right now. That means the markets are really anxious, so that could cause big volatility in the markets. So that's the concern there. Let's get over to cryptocurrencies. It's getting hammered right now. So we have cryptocurrencies right now down 1,400 at 93,000. It was at 108,000 about a week ago. So that's given quite a bit back. And then let's get over to oil. I hope oil is down today. Yes, oil is down today. Oil prices stabilize as data offsets surplus concerns. So if there's surplus concerns, that means oil prices are even going to drop further if that's the case. So we love when the oil is below 70. Love to have it in about 50 or 60 range because that would help inflation quite a bit there as well. So that's our report for today, folks. We do have additional programs coming out next year. So who am I? What do I do? Well, my name is Dan Frio. I'm a loan officer that I post videos every day to help you guys understand the markets, from real estate to equities to cryptocurrencies. What do I do for a living? I do loans. So far today, I got 3 applications in. I'm working on those. So if you're in need of trying to buy that first house in 2025, maybe you're looking to buy that first investment property in 2025, maybe you're an investor. Here's what we really serve our borrowers. If you're just looking for the lowest rate in the country, please call 20, 30 other places, and they should be able to help you. But if you want counseling, you want consultations, me, Alan, and David, those are the 3 people you're going to speak with here. We all have over 30 years experience in this business. If you really want to partner with somebody that's going to help you from application to keys in your hand, that's what we pride ourselves with. So we have the programs. I work at ServBank. All of us work at ServBank, the number 10 largest servicer in the country with mortgages. And we're also one of the country's largest mortgage brokers, set up with over 40 different lenders at this time. So just imagine one application, one credit pull, and we're going to help you basically from keys, application to keys in your pocket. And that's going to give us a ton of opportunities to find you that best rate, as well as none of it matters if we can't get you approved with a specific program. And that's what we have. We have many, many, many programs out there for you guys. So if it's out there on residential loans, I have it. So reach out to us. The best way to do that is just click the apply now button. What we strive for is to have people, you should be vetting us. Okay. You should be vetting us, and we want to also be learning your story. So how do we do that? Well, schedule a one-on-one consultation. You can click right through here. You can schedule a day and time for that. Or if you'd rather call, you're like, I don't want to wait for a week or so forth. Well, give us a call. You scroll down to the bottom of the website, and there's our information right through there. 844-775-5626. That's our phone. And if you want to reach me directly, just email me at dan@therateupdate.com. If you want me to call you, plug in your phone number. If you just have a question, ask that, and I'll be more than happy to answer any of those questions for you. So thanks for watching, folks. God bless. Have a fantastic day. I'll be here at the closing bell, let you know how all this mess ends for the day. Thanks for watching. God bless. Bye-bye.